Welcome to the 60 Days Community Lounge, where we bring in different superstars of the 60 Days Legion to talk about anything and everything in the founder journey. I'm Manaswi, your host for this season. Today, we're joined by Suresh Lalwani. He's the managing director and head of coverage of commercial banking at FAB here in the UAE. He's also a very kind mentor of banking with the 60DS Startups team, and we're truly grateful for everything that he does for us. Thank you so much for joining me today, Suresh.
Thank you, Manasvi. It's a pleasure. Thank you.
Awesome. So let's just get right into it. I want to ask you, where did your passion for finance stem from initially?
So the passion for finance STEM, it came from actually when I was in grade 11. I opted for commerce as a field of study, and since then I actually fell in love with all the logic and why we do what we do, and the data and the numbers behind any action that we should take.
Yeah.
So really enjoyed the finance field in my school and in my business school, and straight after my graduation I got into banking, and it made all the more sense. So I really enjoyed my work right at the early age, when I was 21, and since then I've been with banking and finance, and it's an absolutely enjoy each day at work.
Oh, that's amazing to hear. So, since the beginning, did you have any influences in your life where you were always either worried about money or always taught to learn the importance of money? Is that something you were taught early on?
Yeah, absolutely. For me, I come from a very sort of a humble background, and money was a very important factor in life, back then. So I always used to feel that, one should not be held on to for sort of not doing anything or not being able to achieve something or not being able to fulfill your goals just because of money. So this is one thing, I wanted to sort of get away from my objectives, and that's what I worked very, closely for. And and actually, in order to sort of to make sure that one is financially secure, I ended up enjoying the subject so much, but the run for money was like more towards knowledge and experience, so expertise. Yeah, so really enjoyed each bit.
So, how do you define financial literacy?
So financial literacy, I believe, is two ways. One is as an individual, as a person, how do you manage your finances? And the other is if you are running a business or running a company or any kind of venture, right? It has to make sense, right? So financial literacy is critical. So you need to know how to manage the finances of your company, your business, or as an individual also. You've got to be very, very clear in terms of how to manage money and how to make best use of your time.
Yeah. How early in your life do you think people should start thinking about money?
I think for poor people, it comes, people who don't have the money, it comes naturally right from right from a very, very early age. But people who have access to a lot of money, I mean, for them, I think it's a bigger problem.
Yeah.
Because they've always had access of funds and stuff, but then you got to know how to manage things, right?
Hmm.
So as soon as early as possible, maybe when you're like, what, I don't know, age 10, age 12, you should know how to handle your own personal finances. I'm trying to build this financial literacy in my children. My daughter is 15,
Yeah.
and my son is 10, and they manage their own sort of weekend or pocket money, whatever you call it.
Yeah.
So it helps.
Yeah, so as early as possible then. So even when it comes to parents, you start as early as possible. That's fair enough. Even with my parents, I think I was very naive initially when it came to money because they never gave me a pocket money and they just let me spend it however I wanted to. And then once I got older, I took the commerce stream as well, and that's when I started understanding what money actually meant. So that, and then of course startups also is very different, the money scene here. So, what do you think are the basics that every single person should know when it comes to finance, whether it's personal or business?
So and it's actually a very good question. when it comes to personal money and personal finances, it's amazing, right? Even people from the commerce field, I realize that even my colleagues and other bank fellows and other friends that I have, even they don't sort of either they're too sort of defensive in terms of not taking any risk at all. For example, just keeping all your money in a fixed deposit.
Yeah.
Versus there are some other category of people who are very bullish with their money and they invest everything in equity markets, right? Or not just equity, even let's say derivatives or commodities or something that you don't understand
Yeah.
very easily. So one should be very, I mean, it's important to have that balance, of investments. Risk reward is very important, right? You need to know what amount of risk are you taking for what sort of reward, right? And in life, you got to take some amount of risk to make that money, make that reward. Because and at an early age, right? When you're in your 20s or 30s or even sort of 40s, you should be able to invest in sort of slightly riskier assets, and then in order to derive a better return versus in your late years of your life, when you should be, let's say, in completely in fixed income or in fixed deposits. That's on the personal side, but you should be, but one rule that I personally follow is that you should try and make sure that your money works harder or hard enough as you work, right? So which means that you work very hard to earn a particular salary or something, or whatever money. Your money, whatever you're saving, should also work hard like you are working. You should not just leave your funds in a current account or a savings account where your interests are like almost minimal or nothing, right? 0 or 1% or 1.5%. That's not what your money should be working for. So you've got to put your money to task and for it to sort of do a better job, maybe equivalent to how you are working, so that's very important. Talk to the financial planners, or talk to the people who are investment specialists who can guide you in this, right? That's one bit. On people who are running their businesses, it's critical for them to know the value of equity, value of their time, and when to borrow, when to sort of take debt, when to sort of dilute your equity. These are very basic questions that every businessman should know, right? These are times of valuations and stuff. We speak about diluting equity and selling of equity very easily and very casually. This was not the story, let's say 15 years ago or 20 years ago, when everything used to be like a family run business, and equity, selling equity used to be like a very big thing. Nobody used to sell equity, right, in your business. So whatever you start with your full passion, and you start with like, keeping in mind that eventually your children or your family people will sort of take care of that business eventually, right? But at that time, your debt to equity ratio becomes very important. How much debt should you take versus the equity that you have in business? So it's important to have the basics of finance. Learning of basics of finance is very important.
No, that makes a lot of sense, and I think a couple of things that you mentioned here were so important with relation to risk aversiveness and making your money work as hard as you should. Well, I very recently jumped into the investments space, and I've put a little bit of money here and there. But that also came with a lot of hindrances, even though like my money was in a box. It's the saddest thing ever, but it was in a box because that's where my savings had started, and it stayed in a box forever. And I never put it to grow. So I think a lot of people hesitate to do that. And I think especially women, there's a little bit of a higher risk averseness that's scientifically proven as well when it comes to investment. So that's one thing. So I want to ask you, in that sense, how do you overcome that risk aversive nature? Like, how do you, is it just doing more research? Is it talking to more people? Is it following the crowd? Like, how do you overcome that?
Sure. So the first thing is, start thinking about it, right? You got to first start. It's a very important thing. Don't think that your money lying in a bank account is a good thing. It's not going to help you ever, right? So first thing is, you start thinking about it, and then you start talking to people around you, people who you trust, people who will give you the right advice. Just have a chat with them and see that what are the different avenues where I could invest? What sort of returns can I expect? Now, when you hear numbers like whatever money you have, ideally, I mean, typically, like, when you start your life, you don't have too much savings, right? Even if somebody who's worked for, let's say, 4 or 5 years, will end up from a small job, let's say a saving of maybe 20, 30, 40, 50,000 dirhams in that range, right? Now, if that is the kind of saving that you have, and when someone tells you, oh, you're going to be making only 5% of that money annually if you invest in a mutual fund or an equity market or whatever, or maybe 10%. So you eventually you see, oh, 50,000, 5% is very small, just about 2,500 dirhams. Why do I need to even think and bother about making 2,500 dirhams extra in a year, right? On that. But that's not what it is. It is the habit. It is the habit that you need to start developing. It's not that small 2,500 dirhams that you're working for, or you're taking the risk. So it's important to sort of and learn, right? Try with small amounts, but go and definitely give it a shot in the equity market. Definitely consider bonds. My personal favorites are bonds, right? I really love fixed income in bonds because I think and there are ways to deal and trade in bonds, which is I personally find them secure as compared to equities. It is much more secure. Bonds have their own risks, but then if you learn, if you manage, and if you read about them, you can do you can come up with a good portfolio over the years. And by taking in some leverage, some sort of risk in investing in bonds. So these are my personal favorites. And but yes, so you got to start talking to people, doing your own research, and trying out. Don't just sort of talk, listen, read, and then stay put. No, you got to take some action. Take action, right? Start with small amounts, take action, and do something about it.
On that line, I want to ask you, are there any tools or resources that you would want to share with anyone who wants to start this financial literacy journey?
There is a website called Bond eValue or eBond Value, something of that sort. That's a good place to know more about bonds, right? Get hold to a very basic book that can sort of teach you about what are the different types of investments like bonds, equity, markets, and stuff. There is a very good book written by Mr. Graham, who sort of is the guru of Warren Buffett.
Yeah.
Okay, so just imagine, guru of Warren, right? It's not Warren; it is his guru who's written this book, and it's a very, very celebrated book. It's called The Intelligent Investor.
Yes.
Okay, it's a fantastic book. I got it as a gift from my boss when I was a very, very young kid, and my boss said that this is something I always keep it in front of me, near me, whenever I have to sort of, whenever I'm puzzled in terms of what sort of investments do I do, what do I do in life in terms of money and investments, I refer to this book. So he gifted to me, and I read through it, and I really absolutely enjoyed it. And I also follow the same thing. I keep it with me always. Whenever I have to sort of in doubt, I refer to that book, and sort of it's not like it'll not tell you do this or do that, but it gives you the framework. It gives you the mindset to sort of ask the right questions and evaluate.
I think that's so important what you just said. There's no like cookie cutter tool or a one answer to finance related activities with anything. There's maybe ideas or frameworks that you need to adapt based on your situation. I think that's so important what you've mentioned. And I've heard such amazing things about Intelligent Investor, and I really want to read it. So I'm adding that to my reading list as well. That's so exciting. The next question I want to ask you is, I think we've established here that money is important. We all need to know what to do with it. And it's just very evident that everyone needs to know how to have a handle on their money. But why do we see such a disparity in understanding money? Where do you think that comes from?
There is people. I think people are just either lazy, or they don't know, or they find it too risky to sort of do things. That they don't do anything about it. But that's not right. I mean, you should do something about it. Go and invest that money, and don't let things. Let's say, for example, if funds are lying in your current account or your savings account, and you see your bank statement or your bank account on a regular basis, right? immediately you have that sort of recall in your mind that you got this much money lying in your current account, right? So typically it sort of changes your behavior. You end up spending a lot of money, and because knowing that, you start using your credit card, and knowing that, you've got this much balance in your account, so you're okay to sort of spend or whatever. So your behavior changes in terms of what you see in front of you. I just like to share a story of a client. He mentioned to me once that he was comparing one of his old cooperative traditional banks in India with, let's say, one of the most modern banks in Dubai, which is a global name, right?
Okay.
And he said this modern bank, this global name, kept coming to me every year, and asking for more money and investments here, investments there, showing me different kinds of products and stuff. And look, I have invested this much money and I've lost so much. Now that, if I compare with my bank, my cooperative bank in India, where I had just once upon a time left some money there, and those guys never picked up my call after that, because the service is very bad of that bank in India. And I was very upset. But when eventually, after I went to India after many years, I realized my money has grown much faster and bigger over there as compared to the big world-class name, that bank I've been dealing with in Dubai. So a bank where I did not have access to my funds, and funds were in the right place, grew much better and faster versus something that I always had access to, right? So your money, keep it away from you, that you don't see it on a regular basis, and let it be, let it grow, leave it for some time. So that's the sort of message, or the mantra that I learned from that gentleman.
That's so interesting. When you started the story, I thought it was going to go another way. I thought the world famous bank would have done something better, and the bank, he didn't have access to the money, was gone. That was the conclusion I made in my head. But that definitely makes a lot of sense, because if you don't have access to it, you're not going to go to it as much, right? Like,
absolutely. So this talks about the other extreme of, don't overdo something. Right? You've invested money in something, right? And don't go and check every day or every now and then. And or if you know that funds are lying in your current account, don't look at it on a regular basis. Make sure that you just leave enough for you to sort of live your life, and make sure that your bills are paid and stuff. Rest all, you must invest in something or the other. Let it be on a monthly basis, or sort of some sort of a commitment towards an investment. That's how you build sort of financial discipline, and you'll be amazed to see that there's something called SIP, systematic investment plans, right? Or there's something called which gives you, or you invest in dollars, right? And it helps you in doing dollar cost averaging. And these small investment plans on a monthly basis, if you take up something very small also early in your life, you will realize by the age of 35, 40, when you reach, you would have saved some really good money, and you actually are financially free, and you could actually look for a retirement at 45, 50.
Oh, wow. That is, I think, everyone's dream at this moment, to retire as early as possible. Oh, wow. Okay. So I think in that same line, I want to ask you next question. There's diversification of investments. There's the whole don't put all your eggs in one basket. There's that. But people these days are also talking about diversifying revenue streams. One way is investments, of course. That's one. That's passive income. But how do you think other ways? What other ways would you suggest for anyone looking to diversify their revenue streams to become financially independent?
So there are investments that give you regular income, which includes, let's say, real estate, give you sort of rental income. Bonds will give you coupons on an annualized basis, right? Then you've got equity investments that will give you sort of dividends on an annualized basis, right? The other these days is a very, very big sort of area is the startup funding in startups. So small amounts you could invest in multiple startups, and and wait for the startups to sort of do well, and that's another area where you could sort of look at some regular revenue streams.
But what else is very important to measure or monitor for startups in their early stages, especially?
See, startups at early stages, life is fairly simple, right? So it's not very complicated in terms of investments or things like that. Just forget about diluting in equity, right? Make sure that you have enough capital to run your business, That's what your traditional grassroots sort of way of doing business teaches you, that you should have enough capital to do business, right? And with that capital, make sure that you're completely focused on doing business. And you once you have established, your product is established, your entire business model, your markets, your client base, your suppliers, everything is sort of established, right? You make sure that you keep building and become profitable as soon as possible in life. Once you've crossed your 2 or 3 years of your operations from your own money based on your own capital, right? That's the time when you approach a bank and go for debt first. Debt is important. Debt is good because debt gives you the sort of the turbo engine, right, on your business. You get access to capital, and on that capital you just have to pay interest. And interest you can negotiate, and there are lots of ways of doing business, doing sort of borrowing funds, and interest you can negotiate, and you only have to pay away interest. Equity is entirely yours. You're the owner of the company, right? You don't dilute anything. By having a little bit of debt in your business, it'll give you a lot of boost. You can do things that you always wanted to do. For example, today you have a product and you're selling only in the local market in UAE, right? You know that there is a demand for your product in the neighboring countries, or maybe there is a requirement for building a website for your company, or having a very sophisticated app for your company, or any kind of delivery model or anything, right? And for that you need capital. Now either you wait for the profits of the company to become so big and then you reinvest those profits. Come on, that'll take a lot of time. Instead, right, go to a bank, borrow the money that you need for that additional sort of piece of ammunition that you need in your business. And once you have that, that'll help you in growing your profits. And your profits grow, you pay off the banks also, and you borrow as you need. You borrow from the bank as much as you need, and only for the purpose that is defined. For example, either you want to do a capex funding, or you want working capital finance, whatever it may be. So you take a little bit of debt, right? Invest in your business, grow your business, let it go on for the next 4 or 5 years. Right? So along with your equity, you will have debt in your business, which is sort of 1 + 1 = 2. So earlier you just have 1 dirham to run your business. Now with debt, you've got 2 dirhams to run your business, right? And that will help you to grow your sales, grow your turnover, and your profit. And then after, let's say 5-10 years, and then if you see that you need a strategic partner, or you want to divest, or whatever you want to do, that's the next plan. See, bank is like a checkpoint. It'll tell you on a regular basis if you're going wrong, because every year after you've taken money from the bank, you will have to give them financials, you have to show them your VAT returns, and always behave yourself in terms of your cash flow management and stuff like that, because bank will be a checkpoint for you. They will keep asking you questions, right? And that helps actually. Why are they asking you these questions? Because they're worried about their capital. But in return, what they do is they make sure that the owner of the company is absolutely financially disciplined.
I have one last question for you, which is, what's your rule book when it comes to managing finances? Is there any golden advice you'd want to share with the people listening?
So, I've been a salaried guy, right? So the kind of advice that I can think of giving is only, from the perspective of what I have done and what I have seen in my friends and colleagues, the way they manage their funds. So I personally believe, make sure that your money is working as hard as you are working. That's like my fundamental rule. I don't like to see cash in my bank account. All the cash that I have should be invested, right? And I should have enough cash for me to sort of survive and live, and rest all should be invested. That's absolutely key for me.
Thank you so much. That was so insightful. Really, thank you for your time today, Suresh. And thank you for everyone watching or listening, and stay tuned for the next episode of the Community Lounge. Follow us on Suresh Startups on Instagram, YouTube, Twitter, LinkedIn, you name it, we're there. And also sign up to our newsletter on our website for regular updates. Take care, and we'll see you soon. Thank you, Suresh.
Thank you, Manasi.